recap some of the important things on there is who qualifies for a self-directed 401k. So you want to have like a self-employed individual that doesn't have, and that's the key point, doesn't have any W-2 employees. So you can't have any W-2 employees in your business. You have to have one of the active entities, such as a sole proprietorship, a partnership, an LLC, C corporation, or an S corporation. Your business must generate active income. And then anyone with an IRA or with an old 401k, because you can roll that money over to your 401k and use that here.
And I'll add to that. It's anybody that's generating income within their business or planning to. So the IRS's rules are technically a business that is intending to make income with it. So you don't have to be making income right now to qualify. You just have to have the intent of it. So that's something. Yeah. Yeah. I learned that a long time ago. I was like, oh, that's a neat way to put it.
I intend to make money.
Intend to make money.
Interesting. Okay. That's a very interesting dynamic to keep in mind and consider. I feel like
Intent is all I have right now.
Me too, Lewis. Me too.
Oh, God. Yeah. And the point that I'm trying to make is you don't get discouraged if you're not making any money right now with the business. If you have an old IRA or an old 401k that you wanted to go ahead and transfer to do alternative investing, it does qualify for a 401k. As long as you have the business or a sole proprietor, and you don't have any employees, we can go ahead and set you up with a 401k.
Yeah. And Alicia, who's behind the scenes here helping us out, just drop links into the chat. So if you are an existing client or you're a new client and you have questions, she dropped 2 links there so that you can schedule a call with our team and we can help you answer any questions about 401k. So maybe you're an existing client and you have a traditional IRA, but you realize that you can take advantage of a Roth or a 401k, then go ahead and schedule a call and our concierge team can kind of go over that a little bit with you. And if anything, connect you with one of our new account specialists to help you get a 401k set up. A couple of the advantages that I do want to briefly mention on 401ks is contributions. So your contribution limits are significantly higher. They're some of the highest that you can put into a retirement account. It's all based on your income that you are going to be generating through the business. So you will work with a CPA to figure out what that number is. But the maximum allowable contribution for, I believe, 2025 is $70,000. Or if you're over the age of 50, $77,500. So that's a significant number that you can contribute to do post tax, pre-tax, pre-tax money,
Tax deferred.
tax deferred.
Yeah. So what that means is that if you have a business that's generating a lot of income, this is where your CPA or your tax strategist will identify that this is a way to do some tax savings. So instead of giving it to the IRS, you're going to put it into a 401k and you're going to deduct that from the actual business revenue so that you can go ahead and save on taxes for the year. It's something that you do have to work with your CPA. We wouldn't be able to because we can't see your financials, and that's not something that we advise on. But we're more than happy to go ahead and let you know what the guidelines are and kind of tell you what the questions are to ask to your CPA so that you can get the best advantages.
Yeah. And a good CPA will know how to help you through that because they're helping you, save and not pay as much in taxes every year. One of the other key advantages of the 401k accounts is 401k loans. So this allows you to fully take out a loan from your 401k. It's $50,000 or 50% the account value, whichever is less, without any pre-distribution penalties, so long as it's repaid on a regular basis. So it has to be paid at least once a quarter and within the time frame that you set for your loan, which the maximum amount of time is 5 years. So that's another key advantage. You can use that loan for anything. You can use it to start a new business or take a vacation. Whichever you prefer, the loan is yours to use and however you want to use. The holidays tend to be a busy time for people where they rack up a lot on their credit cards because you're buying gifts for so much family or friends, whatever the situation is. Use a 401k loan. Pay back yourself 10% interest as opposed to your credit cards 22, 25, 28% interest. That'll be a significant savings towards you in the long run while also paying yourself back, Why am I going to go out there and pay Chase 23% interest on my credit card when I can pay myself through my 401k 10, 12%, whatever I can afford?
Yeah. A lot of people, what they do is they set up credit cards and then they do a lot of the startup business costs on there. So this is one of the advantages of having money somewhere else, of an old 401k or an IRA. You can go ahead and put it into a 401k here at Horizon Trust and then take out a personal loan and use that to clear out your credit cards. Now you're paying yourself back. A lot of people don't know that the interest does go back to yourself. It's not something that's paid to us. So if you put your interest rate at 8%, that's growing your retirement account by 8%. So you're not going to find that in any other vehicle. So it's something that people love and they actually take advantage of a lot here at Horizon Trust.
Yeah, absolutely. And if you're ever interested on that, we do have our amortization schedule calculator that's on our website. It's horizontrust.com. And then it's under our forms section. So if you go to our form section, right by where the loan application is, our amortization schedule calculator is right there where you can actually play with it. And it gives you the tools specifically created for our 401k clients in mind. So it lets you play with the parameters that we at Horizon allow based on what the IRS requires us to have as a minimum and maximum on certain aspects. So you can go ahead and go to the website and play with them. And if you are watching us on the YouTube replay, I'll go ahead and drop a link in the description below. So go ahead and check that out and give us a like and a comment on if you are using that amortization schedule and what you're going to be using to pay that down with. Um, let's see. Figure out a couple more bullet points. We normally talk about investment. You guys are here for self-directing. You know, you can diversify your investments. Another one of the things that we don't often talk about is tax-free 401ks. We talk about Roths
Mhm.
relatively often, but we don't talk about tax-free 401ks. It's essentially the same thing. It is the Roth bucket within the 401k that allows you to put in money that has already been taxed and grow tax-free so then it can come out tax-free.
Mhm.
Um, and one thing that I learned not too long ago is that loans actually qualify from there as well. So thank you, Alicia, for teaching me that. That was very insightful because I did not know that you could do that. I want to say that that's everything I really wanted to cover. Everything else is, yep, everything else is just investment conversations.
Just something that I just thought about is the crypto. Crypto is up right now. So we do want to mention that you can do crypto through your IRA or your 401k. A lot of clients have asked us that in the last, what is it, 14, 15 days?
Something like that. Yeah.
Almost a month. So if you are interested in that, or if that's something that you have been wondering, you can definitely talk to your IRA specialist. They'll set you up. The only thing with crypto is that for the most part, you do have to have an LLC attached to the IRA. So we would set up a checkbook LLC where you're the manager of the LLC, and this goes for all investments, but this one in particular, that is something that's required for any wallet that you set up. It has to be in the name of an LLC. So we would go ahead and set you up with the LLC, and then you can go ahead and buy crypto from there. So I just thought of that because I saw that on the notes. I was like, hey, a lot of people have been asking, so I'm just gonna say it. And if you guys have more questions, just let us know. It looks like we have a bunch of questions on the chat already.
Yeah.
So
And no, and thank you for bringing that up because Greg did mention that I think this morning on a call that we were on where, after the election, crypto skyrocketed because that is President-elect Trump's plan to work on cryptocurrency. So a lot of people are seeing that go up. So it really just depends. If that's something that you want to invest in, that is something that we at Horizon Trust allow you to invest in. And the checkbook LLC, like Claudia mentioned, is one of the easiest ways to gain access to that, along with diversifying your portfolio into anything else that you know and understand, whether it be real estate, money lending, or just anything that the IRS allows.
mhm. Any alternative investment, you can do it through an LLC, and you would be the manager of it.
Yeah, absolutely. So that's the brief review that I wanted to give you guys on 401k. And by brief, it took me about 10 minutes, but it's just because we wanted to outline those key points. Because if you are interested, again, we're very close to this deadline. As mentioned, you have until Friday of next week, that's December 6th, to get that 401k application in so that we can ensure that your plan documents are getting created in time before the new year. So with that, we do want to open it up to kind of questions that you have, whether it be about 401ks or about anything else. We would like to focus on 401ks, but we're open to answering your questions and allow you to ask. And we do know that there are already some questions in the chat, so we'll go ahead and get those started. Um,
You want me to read them out?
sure.
Yeah. Okay. We have Nina here that is asking, can we use a rollover 401k? So I think what you mean is, can we roll over a 401k here? Yes. So if you have a 401k, the only stipulation to that is that you can't be employed by the company that you had that 401k with. So as long as you're a previous employer or you're 59 and a half. So if you're still employed with that company and you're 59 and a half, they do let you do an in-service rollover. So that's a little nugget that you can keep. But if you're not and you have an old 401k, we can definitely transfer it over and set you up with a 401k here, transfer that money over, and then you can do self-directing from there.
Mhm. Absolutely. Next question we have here is from Andrew. What can I do if I add W-2 employees in the future and I have a 401k now?
So at the point that you have a W-2 employee, you wouldn't qualify for a 401k. The reason for that is because it's called a solo 401k by the IRS, which means that it's an only one owner or owners. You can have a partnership, so anybody that has ownership to that company can be a part of the 401k, but at the point that you have any W-2 employee, then it wouldn't qualify for this kind of plan anymore. What we would do is we would go ahead and convert it into either a SEP IRA, which is for business owners as well. You can't have an outstanding loan against the 401k at that point. I I believe one of the only things that it doesn't qualify for the 401k loan. But we would set you up with a SEP IRA. You have the high contribution limits and you would be self-directing, or we can set you up with a regular traditional IRA. So if you don't qualify for a 401k and you wanted to go ahead and set up a regular IRA or SEP IRA, all you have to do is call us. We'll get you over to your IRA specialist and they'll be able to go over the plan with you. So there's nothing happens. It's not like, your 401k is gonna be, um it is disqualified, but we can go ahead and get it rectified right away.
Yeah, absolutely. And then Andrew had a secondary question that says, if I sell a large investment, can I put it in my 401k or are contributions only from the business? Um, Andrew, do you mean selling a large investment that you are currently self-directing or something that you're doing outside, like through your own accord that you want to then put like revenue into the business? If you can help clarify on that, that'd be a little helpful just so that we can kind of understand your question a little bit better. Or did you understand it?
I think it's outside of
That
qualified
that's kind of
fund.
how I understood it as well.
Yeah,
Yeah.
which is a no, but if just go ahead and clarify what his question is, Alex's, and we'll be able to answer that for you.
Mm. Go for it.
We have Michael that said, "How do I transfer 401k from the IRA and choose investments?" Do you want to go over the process?
Yeah. So if you have an IRA with us, we can just open an account with us. Go ahead and schedule a call with our team, and we can go through the 401k application to get that situated. If your IRA is not with Horizon, whether it's with any custodian, just not with Horizon, schedule your call again. We'll open up your 401k, and then our transfers team, it's a dedicated team that we have here at Horizon Trust that helps bring money over from other custodians. They have an excellent process, and we're one of the only custodians in the industry, as far as I know, that will actually hold your hand through the entire process until your money gets here. They will do the follow ups with these other custodians, whether it's Fidelity, Schwab, or anyone, to make sure that the money that you have requested to be moved from their custodianship to us will get transferred. So we fill out a little bit of paperwork, whatever the process requires with your custodian, and then we get that situated. We jump on a call with you and get that money moved over. In regard to your investment, we do have someone on our team that can help you with your first investment. We do not advise, which actually brings me up to my disclaimer that Horizon Trust Company is a passive custodian, and as such only performs the duties of a custodian. We do not provide advice, sell investments, nor offer any tax or legal advice. And that is because we are not licensed to give advice. So we can't tell you, oh, go make this investment with Bitcoin because it's really good right now. We're not licensed for that. We'll get in trouble. So we can't tell you to do that. We will hold your hand and guide you through the process for whatever investment you want to do. We'll make sure that your paperwork is all in good order so that you can make your investment, and then kind of just get you through the process. And once you're through the process, we don't disappear. We're still here, and you can still contact us and ask as many questions as you need assistance with to ensure that your account is good and that you are doing everything correctly.
Yeah.
Mhm. Let's see. Daryl asked, "Can I use Horizon Trust instead of Principal?" 1000%, Daryl.
You should.
1000%.
That's what you should do. You
Yeah.
should use Horizon. I'm just kidding. Principal is just another it's just another custodian. Obviously we're all regulated, and it's just another one. So it depends on what you have over there. We can go ahead and transfer it over. So set up your appointment with one of our specialists, and they'll be able to go over the transfer with you.
If you scroll up in the chat, Daryl, you'll see the links there. And one of the things Greg always says is that if you're not too familiar with self-directing and you want to kind of just test it out, you don't have to move all your money. If you have 100,000 with principal, you want to just move 50,000 and start there to test it out and see what it's like. You can do that. It is not an all or nothing situation. It's entirely within your control. So go ahead and give it a try. See how it works out for you and see if you like it. Uh, do you have the next question?
Yes, we have Jennifer here that says, I'd like to convert my traditional IRA house into my Roth IRA house and need an assessment for taxes. Can I please have someone from Horizon Trust help me with that? Oh, okay. So she has a property in her IRA. She wants to do either a full conversion or a partial conversion of the actual asset. Um, so I can definitely bring this up to our operations department. I think you're going to need an appraiser so that they can appraise the house of that, and then that you would tell us if it's going to be a full conversion of the asset or if it's going to be a partial, which is something that's allowed. So that's a great question, and we can definitely have somebody reach out to you tomorrow to go over what the process is.
Yeah. Um, let's see. Julie asked, I already have a checkbook LLC approved by you. Can I mix investments within it? Meaning, can I invest a portion into real estate, a portion into crypto, or do I need to keep them separate into multiple LLCs? Julie, that is a great question. And no, you can do any investment you like and as many diversifications as you'd like within the LLC. You kind of want to just make sure that you're not mingling like how Jennifer mentioned of traditional and Roth funds, because then it gets a little bit messy with the pre-tax and post-tax. But as long as it's one account, if it's just your traditional IRA, if it's just your Roth IRA, if it's just your 401k, as long as you keep those the same of which one is going into your LLC, you can kind of diversify your investments. That checkbook LLC allows you that diversification, that control, and that flexibility to go into crypto, real estate, private money lending. Those are usually the three that always come to my mind.
Property.
Buy a property, buy and holds. Yeah. So, no, that is a great question, Julie. If you do want to diversify, maybe you want to keep different properties or like say two properties in one and then two properties in another. That's entirely up to you because that LLC still has that protection of the LLC. So if you want to make sure that, if something happens, and any lawsuit or something like that kind of goes into effect, it stops at the LLC, then that protects you a little bit more. But that's entirely up to you on how diversified you are and how many investments you have and how you want to kind of handle your protection.
That's correct. All right. So we have David. Hello from Thailand. Hello, David.
Mm.
I already have an LLC and IRA set up with Horizon. Can I roll a 401k from my old employer into a self-directed 401k in my LLC name? So I already have an LLC and IRA, so okay. So I think what you're asking is, can we go ahead and set up, can we roll over from an old 401k to the existing IRA here? The answer is yes. Now, in addition to that, I think you're asking to a self-directed 401k. So if you do qualify for a 401k, that would be something that we can go ahead and identify and set you up with an actual 401k. And then you wouldn't need two. You wouldn't need an IRA and a 401k. You would just need one. So we would basically convert the IRA into a 401k account and put everything into that, and then move your old 401k into that account as well. So it's just recharacterization and setting up a new account. So definitely book a call with your IRA specialist, and they'll be able to go over it with you.
Absolutely. I hit up some of the questions that were in the Q&A because I didn't want to forget about the Q&A section of our webinar. But Julie asked, and this might be a different Julie, but it might be the same one.
It's the same one.
Yeah, Julie asked, can we can be our only employee in a solo K, correct? I pay myself a W-2, but I'm the only employee. That is correct, Julie. So that's fine. You can pay yourself W-2 income from your business, but as long as you're the only employee, then you do qualify for a solo 401k because you are the only employee. If there was a spouse, your spouse would also qualify for that solo 401k. So that's the advantage there.
Yeah, and to add to that, when you make contributions, your 401k would make, or your business would make an employer contribution and employee contribution. So you as an employee would be able to take the contribution advantage, and that's how you can maximize your contribution for the year. So that's a great question. We have Jerry here. Can you tell us the most common ways investors are using their SDIRA to increase cash flow? Yeah, we can definitely go over a couple of, we were just talking about this. Greg brought up, he was doing a presentation this morning, and he brought up that his son is flipping forklifts. He keeps forgetting the word forklift, so it's really funny to us
It
because
is.
he just says equipment, and he just like gets, he just
He
can't
fumbles trying to
retain
remember forklift,
forklifts.
and he sits there for like 30 seconds trying to remember the word and then settles on equipment.
Yes. And what that means is so Carson, his son, actually is working with a company that wholesaling forklifts. So they sell his IRA, not him personally, but his IRA, the forklift. And then what Carson does is he flips it for a profit. All of that profit has to go back into the IRA or the Roth IRA, but it's a great creative way to make, to make instant money. You have to have good connections and know what kind of people you have to talk to, but that's a really creative way that we've seen. He also talks a lot about the horse. Do you want to go over what the horse
Yeah.
is?
So there's a cutting horse.
Cutting
He was
horse.
big on this about 6 months ago. Yeah, he loved his cutting horse after he found out about it that one of our clients was doing it. So for those of you that don't know, there's a cutting horse is just a ranch horse that is highly trained, and they're intended to kind of go through and cut cattle, sheep, or any other livestock from the crowd to be able to separate them. So some of these horses, from what I've learned from some of our team here, can go up to thousands of dollars for a weekend as a
Hundreds of
rental.
thousands.
Hundreds of thousands, yeah,
Yeah.
for a weekend rental. So if there's a live event, and it's because the horse just has to be trained to be able to maneuver through cattle or anything like that and not get scared, not get pushed around, and do its job to move the livestock where it needs to go. So whether it's separating males and females, or you know, children, livestock from the parents, whatever the case is, that's what that horse's job is intended for. So it's a huge thing where these people can rent these horses and earn such great income on that investment. And one of the key things here that was kind of mentioned there is that you want to increase cash flow. For the cash flow, you still want to remain passive. Like Claudia mentioned with or like I mentioned with the horses, and like Claudia mentioned with the forklifts, is those are passive things that are done. we are not actively riding the horse and cutting the livestock ourselves. Carson is not actively getting the equipment and fixing it and flipping it, and
Mhm.
however he just invests. So you're
As a
kind of
management company, that's
correct.
very important.
Yes. So you want to stay passive. As long as you're staying passive, you can increase your cash flow exponentially if you're working with a partner. Sure, they can take a cut of the proceeds to make it happen, but that'll definitely work out for your benefit to increase that cash flow as long as you're staying passive. Once you kind of cross into that active income line, that's where you kind of get into a little mishap with the IRS. They're like, hey, you did way too many deals here to be a passive deal.
And the most common ones that we see are private money lending from your IRA. So I just had somebody ask if they could borrow $25,000 from an IRA. They'll pay 12% annualized. They only need it for 6 months. So obviously, you're not going to get the 12% because it's not going to be for 12 months. But if it extends to 12 months, then you'll get the 12%. And if not, you'll get whatever the percentage is at the 6 months. We
Mhm.
did a deal like that as a group. We just got a group of investors to do it, and it was lent out for 4 months, I think. It was a fast deal. So we didn't get the full amount, but we did get a good return, and we got our money back right away. So those are out there all the time, depending on what your community is and what your where you're trying to find your deals. So those are always really cool to see. Or you could park your money for 3 years. There's funds, syndication deals that we see all the time that you're going to go ahead and lend the money out for 3 years. They're paying you 13%, sometimes less, sometimes more, depending on who the investor is, because we don't find investments. So we just look at paperwork and we say, oh, that's cool.
Yeah,
but
absolutely.
but we're definitely not the investment part of it. So you park the money there, they keep it for 3 years, you get your monthly returns, you see your IRA grow, and at the 3 year mark, you get your money back. You either reinvest it or you go ahead and do something else with the money.
Yeah. So there's many great opportunities if you know where to look. And one of the things that I've been seeing kind of more active on our side here is that if you are an existing client and you're not in it, you should be. We have our Hot Topic Corner Facebook group. I've been seeing people have discussions in there of deals and just conversations about where to invest next. So people are posting deals that they do, and some of them are like real estate investors. Their profession is to do real estate investing, so they have these deals that they need money for, and they're posting them in that Facebook group and getting money. Because if you're at Horizon, you essentially have access to a bank, and all of you are the lenders. You are the individual banks that are lending to these deals. So that lets you make an investment, that lets you increase your cash flow, remain passive because you're lending it to this real estate investor and getting the terms that you want, whatever is agreeable to you and whatever works best for you.
Yeah. All right. So I have somebody ask, what are the differences of checkbook LLC versus SDIRA? That's a great question. So the checkbook LLC will be an asset within your IRA or 401k. And the reason why it's so popular within our industry is because you get to manage the funds and the investments, and you don't have to come to us every time that you have an investment. When you have the money here at Horizon Trust, what's going to happen is every time that you want to do an investment, which we do all the time, by the way, it's not something that's super difficult, but people just like having checkbook control and having access themselves. But when you have the money here at Horizon, what happens is we're gonna do a what we call a direction of investment. It's an internal form that basically says, "Hey, Claudia, hey Horizon, I want my money to go to Alex Padilla because I'm doing a private money loan to him." Then we would ask for a promissory note, any secure if it's a secure document, then we would want all the secure documentation to back up the loan. If it's unsecured, then we hope that everything goes well. But we wouldn't ask anything else from that, and then we would do a review of the documents. We would call me, who is the investor, say, "Hey, Claudia, are you sure you want to send this money over to Alex? What is the bank routing number, the account number? How much are you sending?" Basically, do a verbal verification of the transaction, and then we would send it out. It's still super fast. We are the fastest in the industry. It's 24 to 48 hours from the time that we receive the documents in order to the
Mhm.
time that the investor that the investment is getting is getting the funds.
Funds.
Yeah. But with the checkbook LLC, instead of that, what's going to happen is me as the investor is just going to get a promissory note signed by me as the LLC, as the manager, and Alex as the borrower, and then I'm sending the money out. So it can be done within the same day
Mhm.
if you're in a hurry. And what another thing that people can do is like somebody else asked about diversification. You can do that within an LLC. You can have $20,000 in crypto, $20,000 lend out to Alex, $20,000 in a forklift, all in one LLC. You have to make sure that everything is going back into the LLC and that you're not taking any profits or any kind of gains from that LLC. And then eventually it's going to go up to Horizon Trust as the owner of the IRA on behalf of Claudia Guzman.
Mhm.
So the difference of the checkbook LLC is basically that you just have control of the funds. Some people love it. Most people love it because people like to be they like fast, right? They like to be able to get things done right away. And other people like the security that Horizon does offer, which means that they want us to review the documents, make sure that they're compliant, make sure that the money comes out through us. So it's just a personal choice.
It is 100% a person. Yeah.
Yeah, it's a personal choice. It's how fast you need your investment. There are some investments that only checkbook LLCs can do, like tax liens,
Mhm.
because you need
Yep.
the money right away. There's no time for you to do any kind of document verification for us. Even if we're the fastest, it just doesn't work for that kind of investment. So for a tax lien, for crypto, for having a wallet in crypto, you do need a checkbook LLC. So that's something that if that's the kind of investment you're into, you're going to have anyways. And then others just prefer it.
Yeah. No, absolutely. And great points there, Claudia. One of the things we always say checkbook LLC, that's just kind of how we refer to it. Another name that you may have heard out there and that we may have said a couple times is checkbook control. That word right there, control, is the key on what that LLC provides to you. It does the exact same thing that we can do within Horizon Trust account, like Claudia mentioned and outlined, apart from maybe like your tax liens. That would be maybe the exception. But yeah, that control that you have over the money. And Greg has said this before, even if you have the money in an LLC, if you still want us to look over the documentation, because everything is still within your retirement account. So it does still have to remain compliant with the retirement account regulations. So if you want us to look it over, we will look it over. We don't have to process it from your account if it's going to be done through your LLC. And you just like, hey, Horizon, can you please review these documents? I need to make sure they're compliant for the next investment I'm doing through my LLC. We'll help you through it. That's not a problem for us. And speaking of compliance, this next question was a big one that I was like, okay, we need to talk about this one. We got an anonymous question that someone opened a self-directed IRA and created an LLC. Amazing. I would like to buy real estate. Can I live in the property for 2 years and then rent out the property? It's a big no. It's a big no because you are not able to personally benefit from your retirement account until you are taking those distributions at whatever point in your life that is. But you cannot be actively living or vacationing or using a rental car or anything that you are utilizing as an investment within your retirement account. And that doesn't just mean you, that also means a disqualified party, which if you think of a tree where the roots, the trunk, and then kind of the branches that go up as the tree, you have your grandparents, parents, your spouse, which is part of the tree as well, and then your children and grandchildren. That's the upward and downward linear path. Those are all disqualified individuals. But now, if you go branch out on the tree into the branches that go outward and the leaves that go outward, you have your siblings that qualify and their children, aunts, uncles. So that's your parents' siblings. Those parties qualify. So
Cousins, friends.
yeah, we've
Yeah.
had someone who wanted to. It was a great investment idea, but not possible. They wanted to buy a house within their retirement account near college so that their daughter could live in it and then let the daughter live there for free and have other tenants who would pay the rent and the mortgage. And so it would be a benefit win-win situation. But unfortunately, you can't do that because the daughter is a disqualified party. But I love the idea.
I do too.
I'll have to do that if or when I have kids. Personally, not with my self-directed account.
All right. So I have somebody that, oh, Jordy. So they are asking, could I make contributions from my W-2 job if the business sponsoring the 401k isn't currently making any money? That is a great, great question. And the answer is no. Your company that you work for right now would have a 401k that's available for you. And that's the only kind of 401k contribution that you can do from that employer, because the sponsoring company for this solo 401k would be the employer. The business has to generate income from that business. It can't be from another business. So I love that idea. I wish we could do it, but unfortunately, no.
Charlotte asked, is a self-directed IRA a type of 401k? So no, Charlotte. Uh, Self-directed is one type of vehicle. So anything can be self-directed with the right custodian. Horizon Trust is that custodian. We are a self-directed custodian. So all of our retirement accounts, our traditional IRA, Roth IRAs, 401ks, they're all self-directed, which puts you in control, puts you in the driver's seat. But a self-directed IRA is not necessarily a 401k because they are different in the way the plans are structured. 401ks has certain regulations about them that an IRA does not. But here at Horizon Trust, everything is self-directed, and we offer pretty much your all of your traditional retirement accounts, traditional Roth, SEP, simple, covered allocation accounts, 401ks. We have those.
Mm-hmm. Correct. All right. You want to answer a couple more questions and then we'll wrap it up.
Yeah, absolutely.
I have somebody that's asking, I have a PLLC and you guys mentioned that we can invest in crypto. Can you explain how it works? Thank you. I don't know what the P stands for in LLC. A private LLC maybe?
Not entirely sure. Yeah.
Yeah, if you want to tell us what that P stands for, I just don't want to answer it incorrectly.
Oh, and Andrew responded to the message. Andrew, I'm sorry, you probably responded to this a while ago, and then we got distracted by other questions. So he mentioned that it's outside of the 401k. So going back to Andrew's initial question was, if I sell a large investment outside of the 401k, can I put it in my 401k, or are contributions only from the business? So Andrew, there's personal contributions that you can make. I think Claudia already covered that a little while ago. There was personal contributions that can be made, and then there's business contributions. There's different amounts that can be entered by each one, but that's what it is. So from the personal aspect, you are able to contribute up to a certain amount. You're going to want to work with a CPA to figure out what that is. But then your CPA will also help you figure out how much the business can make. And that comes from the active income that comes from the investment. Professional limited liability company.
Yeah. So I think what you're asking is, can you invest in crypto with that LLC? That wouldn't be any qualified funds, so it wouldn't be a checkbook LLC like we've been describing. Um, Whether you can invest in crypto with that LLC, that would be a personal choice. That's not qualified funds.
Correct. Yeah, that's what it appears to be here. But you can also schedule a call with us. We can definitely look at it a little bit more and just make sure. But yeah, from the looks of it initially right now, that is most likely not qualified. So from the PLLC. Richard asks, can I use a checkbook LLC to buy a house with a loan? Does the loan have to be non-recourse? Uh, so yes, Richard, you can use the checkbook LLC to buy a house, and you can use a loan. Non-recourse loans are the only types of loans that qualify within a retirement account, because you cannot sign for the loan personally. So the IRS sets that as a rule and regulation around that with what qualifies. So you usually have to have a little bit more skin in the game than maybe your traditional loan, because the bank is putting up something more with only regard to the property as being the collateral of as a repayment method. So that's what they want to make sure that they're protected as well. But yes, a non-recourse loan will be primarily what you'll use to do that. Charlotte asked, I started a self-directed IRA with Horizon with funds rolled over from a previous employer. but I am a W-2 with a company that has a 401k. Can I have both? Yes, Charlotte, you can have both. If you started a self-directed IRA, if you have like a traditional IRA or a Roth IRA, there are contribution limits on what you can and can't put in. We have a little cheat sheet on our website, horizontrust.com. Under the form section, we have it's called a 2024 contribution sheet, I believe, or contribution form. You'll see it, it's organized there in alphabetical order under our other forms section. But it is right there and shows how much you qualify for. 2024 contribution limits is what it's called. And that'll allow you to see how much you're able to contribute apart from your 401k. Um, for this year, I believe it's 7,000 for like a traditional and a Roth. Those two numbers are usually the same, but it's $7,000 as the maximum allowable contribution. And I don't believe, yeah, so that's what it is, and it did not go up for 2025. Those remained at the 7,000. Some other ones did, and we'll have that information updated on our website once it's finalized. But once it is, it'll be available there so you can see what those 2025 limits are. And with that, I think we've reached all of our questions. I believe everything was answered here. Thank you to you all. We're very grateful for you all. You are the reason why we do these webinars. You ask great questions, and it just brings so much information, so much insight, and even helps us refresh our memory because Claudia and I try to jump on and support our concierge team every once in a while when they need support. And we've even looked at each other and said, I don't remember this. And it's just because we get out of the loop and go into our daily routine that we forget some of the stuff. So this helps refresh our memory as well. So we appreciate being on here just as much as we hope it helps you. So with that, Claudia, very grateful for you being here with me today. It's been an absolute pleasure as always. So thank you very much for being here.
Yeah, thank you for hosting. This was great. I hope that we answered some good questions. And if you have any other questions, just schedule a call. We're here to help. And we hope everybody has a great Thanksgiving.
Have a wonderful, safe Thanksgiving. If you're traveling, please be safe. Leave with time if you're driving, and just be cautious. All right, we'll see you all on the next one.
Bye.
Our last webinar of 2024 will be in 2 weeks, so we will see you all then.
That's a wrap.
That's it. Bye, everyone.
Hey, thanks for watching this video. Hopefully you enjoyed it. There's lots more great content for you to learn and enjoy and apply to. And so anyways, click on the link below and listen to more videos or set an appointment with us. We look forward to hearing from you and also helping you.